let's talk about a financial tool that might just be the unsung hero of your benefits package, the group annuity. You might not even realize you have one, but it could be the secret key to a much more secure retirement. So let's dive in. I mean, this is the question, right? It's the one that keeps a lot of us up at night. We're all trying our best, putting money into our 401ks, but watching the market go up and down, it can be pretty stressful. But what if there was a part of your retirement plan that wasn't tied to all that volatility? What if it offered you a guaranteed income stream, kind of like an old school pension? The reality is, the classic company pension plan, well, it's becoming a bit of a rarity these days. But that doesn't mean employers have just given up on providing retirement security. No, they're looking for other ways to do it. And that's led to the rise of some interesting options, with the group annuity being one of the big ones. So, what on earth is it? Think of it like this. Your employer buys a single insurance policy, but it's for a whole bunch of employees, including you. And the whole point of this policy is to pay out a steady, reliable income once you retire. It's basically a pension, just managed by an insurance company instead of your employer. How it works is actually pretty simple. First, your company pays the premiums over to an insurance company. Step 2, that insurance company takes all that money and invests it. And then, finally, when you hit retirement, that investment pays you back as a guaranteed stream of income. See? It's a simple flow, and it's all designed for one thing: your security. But of course, like any financial product, it's not some magic bullet. There are some really big upsides, but there are also a few trade-offs you've got to understand. So let's break down that balance. And you can see the core tension right here on this table. The upside is huge, right? You get incredible retirement security, tax-deferred growth, and the costs are lower because everyone's risk is pulled together. But the downside? Well, it's kind of a one-size-fits-all solution. The rules can get complicated, and you have very little say in how it's customized. So that brings us to a really important comparison. To truly get a handle on what a group annuity is, it really helps to see it side by side with its cousin, the individual annuity. The biggest difference, the most fundamental one, it all comes down to one simple question: who's the customer? With a group annuity, it's your employer buying one big policy for everyone. But with an individual annuity, you're the customer. You're buying a policy just for yourself. So what you're really looking at here is that classic trade-off between cost and control. A group annuity is almost always going to be cheaper because of economies of scale. The fees are spread out across everybody, but you pay for that with a lack of flexibility. On the other hand, an individual annuity can be customized to your exact needs, but you have to bear the full cost and all the risk yourself. And it's also fully portable. It follows you from job to job, which isn't always the case with a group annuity. Okay, so that's all the theory. But let's bring this all back home. What does having a group annuity actually mean for your retirement plan? This is the bottom line question, isn't it? If your company offers this, is it just some nice little perk, or is it a serious asset that you should be building your financial future around? The answer is a huge, resounding yes. You should absolutely 100% count it. This isn't just some minor benefit, it's a powerful asset. That guaranteed income stream for life is incredibly valuable, and it can act as a solid foundation for your entire retirement. So how does this actually change your planning? Well, for starters, it gives you that pension-like foundation to cover all your essential expenses. That takes a ton of pressure off your 401k and other savings. And because you have this guaranteed income, you might be able to take a little less risk in your other investments. Now, there is one crucial thing you have to check. Does your annuity have a cost of living adjustment, to protect you from inflation? If it doesn't, you'll want to plan for that with your other savings. And just to really drive this point home, these plans are pretty rare. So if you're lucky enough to have one, don't think of it as just a benefit. It's a truly valuable asset. Make sure you're factoring it into every single retirement calculation you make. It could honestly be the cornerstone of your financial security. And all of this leaves us with a final thought to chew on. As we look at the future of work and retirement, it really seems to boil down to this fundamental trade-off. What do we value more? The total freedom of personal choice and customization, or the profound security that comes from a guaranteed income? There's no single right answer, of course, but it's definitely a question worth thinking about. Thanks for joining me.